Good morning, everyone. I'm going to show another example that I told traders yesterday, and for the new people in our trial, I hope you enjoyed it. I told people to short Amazon at 121.50. That was the gap. And everything that I'm talking about this morning, everyone gets all in up here, and look what happens. Down they go. The public only knows how to do one thing, and here's what they do best, is that when they see something gap up, oh boy, I got to get in. I can't wait to pull the trigger. Go ahead. It was a short gap. And it fell over $4 off the high. The swing low yesterday was 116.56, and the swing high was 121. And understanding pre-market futures, artificial gaps in prices, they're designed for professionals like me and the students in this school. That's what they're designed for. Then the rest of the world knows only how to do one thing. They buy them. We've got a trading platform that says that when this happens, it's time to short, because that's all of the positive event. Everyone's very positive on the open. But guess what happens to them? Their positivity goes away very quickly. And it's because gaps are gaps. They work both ways. But look what happened. As everyone got in, they even had to buy the pullback, thinking they were getting a deal here. Oh yeah, they got a great deal. And you're going to learn here all the different techniques in pre-market gaps, what future gaps do, stock futures, and everything else about this kind of trade. And here is Google. Google is our trade of the week. Google had a nice run yesterday. They gapped it up, they came, but look what happened to Google. It came all the way back down, and and here's Google right now, gapping up. And we said it was trade of the week. We featured on Google the 60-minute chart. And we featured everything about that I recorded yesterday. And if you're here to learn how to be a professional and be guided with 30 years of trade management, we talked about it, we recorded it, you've seen it, and the thing about it is, the reason why it's going higher, it's got a 60-minute buy signal. And basically, Apple Computer, it too has yesterday's trading range. You can see on a 60-minute, went straight up and rolled over. Okay, the market, and here's the gap on Apple. And we'll be trading them today. And what I'm going to tell everyone is that options expire next week. So basically, part of the gimmick today, it's called an artificial gimmick gap. The call prices are going to open up inflated on these contracts, on these options, and people will get sucked in on them. They'll buy them. We'll let them come back in line to us, and we'll buy them. And basically, that's another reason why they have these gaps in the morning. They're not people who bought the stock market. The stock market has not opened yet. It's only 6 o'clock my time, 9 o'clock in New York. They're bid up in the futures market. So basically, one of the trades we're going to be looking at doing today, we told people last week that there were trades that were ready to bounce. But the premier trade is Google, stock trade of the week. That's this one here. And here's my 60-minute chart. Here's yesterday's 60-minute gaps up. Bam. It rolls back over. It fills it in. But there's a buy signal. Anytime there's a 60-minute buy signal on Google, because you have not had a buy signal on Google for many, since December. You have not. You've been in a sell signal for that long on the 60-minute chart. So basically, when Google goes up and it pulls back, we'll intraday trade the 560 call. Up and out of the money, 560 call. So what we're going to be doing today is that here is this 560 call is very cheap. They went up to $3. They got cut 100% in half. And people bought into that yesterday. And we got wholesale. Buying down here is wholesale. The public buys up here on the open. Because that's what they know how to do. Because they went and took an options trading course that says, oh boy, you got to do that. Sorry. Hey, take that junk and throw it out the door. Okay? We'll show you every time how to really trade options. So in pre-market, Google is the trade of the week. We'll let Google gap open on this 3-minute chart. When it opens, we'll let the contracts go up to the high. Then we'll let Google reverse. We'll get some intraday entries in and out. Yesterday, I gave a limit order at 320. The new people that are taking this free trial, seen them up there. When I gave that bid, that strike price didn't get hit until the last 5 minutes of the day. That's how much discipline that was to get that entry. Why everyone else was buying up here. If I'm buying 10 contracts for $6, that's $6,000. If I'm buying 10 contracts here, that's only $3,200. Sorry, do the math, people. That's what you call buying wholesale. That's what stockmarketfunding.com is about. Call us at 702-685-0772. Take one of our 30 subjects that we specialize in. We've been doing this for 30 years. You're witnessing it on the tape. Go visit us at YouTube. Find the tapes that we talked about. Putting in short-term bottom reversals in the market. But we're still in bear reversals.